Hello YouTube, back at it again, and with a portfolio review with the week ending October 24th, 2025. This video is just a way to kind of document my trading path and to just kind of explain the current positions that I have in this portfolio. I just want to put everything out on paper and just to have just kind of a vocal rendition of my portfolio and just to kind of put paper into words, I suppose. But as for these funds, this week has been very lucrative for me. Tech sector has been blasting off for the past couple weeks, and my account has been reflected in that current push. Um, let's dive deeper into it and let's see what we can do. Right now, I currently have a pretty big stake in Nebius. I have around 100 shares, and Nebius has been, again, ripping these past couple days. Nebius has been down around 20% for the past couple weeks, but just within these past 3 days, Nebius has been absolutely soaring for the past couple days. I do have a short call position on it, but I'm very happy for it to be called off. I had a lot of premium off that, but it still has 1 month left to go before it expires. But that short call position does give me a lot of premium, and honestly, Nebius might be a really good play for me, and I might buy some leaps on Nebius if it were to retract again. Again, we have Webull. Webull has been doing pretty good as well, but is still a dog and has been taking a beating as of late. I do have some a short hedge with it, but it expires by the end of next week at $14, so I don't expect it to be in the money anytime soon, but I do have a sizable position into Webull as of now. I know earlier in the week I did have Coca-Cola, but the Coca-Cola shares have been called up for my short call hedges as well, but I no longer have the Coca-Cola positioned as of now. I do have Bank of America. Bank of America did have really good earnings the past couple earnings reports, so I do have a pretty sizable position on that, around 100 shares. Not the greatest size of my portfolio, but it's something to kind of reflect the banking sector and just give myself some exposure to that one. Bank of America is really good. JP Morgan, Citi, the banking stocks have been doing really well, and I will probably size up later, but as of now, I have around $5,000 into it, and it has been growing to expectation. I do have some short put positions on Apple. I believe Apple is going to be really good down the line. The story has changed on it. The iPhone 17 sales have been really good. And honestly, if for these big tech stocks, story is everything. And I do have some short call positions, short put positions on it at the money. So if I do get called up, I do have a lot of collateral for the 100 shares of Apple, but if I don't, then the premiums are pretty rich for that one as well. Apple and Google as well. Same thing. Google has a really good story, and I think a lot of people are piling into Google. I'm a little bit late to the party, but Google is a really good part of the portfolio as well, and I have pretty deep exposure into both Apple and Google, so they're reflecting a big part of the portfolio, and we'll be sizing up those positions in the near future. I do have Philip Morris. Philip Morris is more of a hedge play, and I don't expect it to do very much in the future. It has been doing pretty well since absolutely shitting the bed during earnings, but it's still taking a big hit in my portfolio, and yeah, it's just mostly a hedge play. I just have it as exposure to another market, but as for now, it's going to be a dog, and hopefully I can offload these lead calls in the future because Philip Morris's growth is kind of teetering at the moment. But I do have exposure to that sector, and hopefully I can offload it. But worst case scenario, I just offload it for later. UNH has been doing really good. I do have leaps on those, and it's pretty big exposure on that front. And I really like United Health a lot. United Health is pretty big in the healthcare sector, and I want exposure into that one. So I have three leaps on that one, around $5,000 ish, and I kind of hedged it with some leap calls as well. Leap calls have been printing a lot lately, and hopefully in the near future, it does go up to 385. I'm happy to give up those late calls, but as of now, I don't see it bursting through the 385. But if it does, I'm happy to give up. These are my collateral for the most part. VOO has been doing really good. It is my exposure to the general market as a whole, and VOO has been doing really good. It gives out dividends, and I also use it as collateral for short put positions that I have for other companies. I usually combine SWVXX with VOO, and that would be my combined. That's my combined collateral for if I want to do short put positions and I need the extra cash. I'm happy to liquidate any more VOO for any other positions in the near future. I think the combination of SWVXX for a more solid collateral is my play here, and I just use it for collateral and just gaining interest on unused cash for the most part. And I also have QQQ. QQQ is a small part of my portfolio, and it's doing as well as VOO. It's a small part of my portfolio, and it's just a little exposure to the tech market generalized. And SPYI is also a monthly dividend gainer as well. I'm not really a fan of it, but I just like to have it to see some numbers go up every month or so. The Fortress Fund, in general, I use it as mostly a day trading fund, and the day trading has been pretty good during the hedging of kind of bad days, but overall, the Fortress Fund has been doing really well as of late, as with everything else, but I supplement it along with the day trading. The day trading has been doing pretty good these past couple weeks. This week has been taking a hit, but on Friday I did get a lot of gains back with some AMD trades for the most part. AMD has been doing pretty good. It's been ripping a lot, and I just do some riding the wave trading for that one for the most part. And I think I have a script right here that give me some trades that I did, and I just took the early morning action, entered early, and just kind of exited off when the volume started dying down. So I just like to take some scalps here and there to just kind of hedge and just give me some upside exposure to AMD in the short term. I usually don't hold these positions overnight, but it's something that I like to kind of supplement the growth of the other overnight positions. The Fortress Fund is my main account, but I also am working with the Keystone Fund, and the Keystone Fund is mostly geared towards long-term investments and exposure to this kind of less optionality, but it's more of a shares as well. Microsoft is a core part of this portfolio. Microsoft is an evergreen stock. You kind of want it for life, I suppose. And I've been having this one for more than a year. It's a long-term play, and I don't intend to sell it anytime soon. Microsoft is a beast, and Microsoft will probably stay here forever for the most part. Maybe I'll sell it just to rake in that long-term tax benefits, but honestly, it's going to be here forever. I'm already up a lot on it, and Microsoft's not going anywhere. It's going to stay for the most part. Again, I have a little small exposure to Apple. I should have sized up more, but honestly, I think Apple is going to stay here forever as well, and is going to be kind of a small part of this portfolio. A little bit exposure to, I don't want too much exposure to big tech, but yeah, I just wanted to just have a little representation in the portfolio and just kind of have his face in there. But for the most part, APH, it's a sleeper hit. You sell shovels during Gold Rush, and APH has been doing really well. And its past earnings report has been just kind of just blasting through. So APH has been doing really well for me. I have leap calls on it and probably offload it real soon, but it has been doing really well. Even though it's a small portfolio position, it has been ripping. And yeah, I'll maybe offload it soon, but APH is awesome. GM is amazing as well. There's some short put positions. If it does go below 69, then I'll definitely buy 200 shares of that. GM all day. It's doing incredible. Its earnings has been absolutely incredible. And if I want exposure, I would definitely be happy to buy at 69. But in the future, let's see where this goes. I'm in GM for the long term. Again, Philip Morris is a small part of this portfolio, and it has been taking hit like the Fortress Fund. I made this play a long time ago before the recent earnings falls, but it's still a small part of the portfolio, and just kind of have a exposure to other markets except for tech. And again, UNH is represented in the Fortress Fund as well. UNH isn't going anywhere, and honestly, it's only up from here. UNH is really good, and I'm definitely going to keep this one for a little while until something drastic happens. The story isn't too bad on the healthcare sector, and I don't think UNH is going anywhere. No news for UNH is good news for them, and as of now, there's nothing in the pipeline that would change the story for UNH. So UNH will have a sizable representation in this portfolio, and honestly, this portfolio has been doing good for the past year, like everything else. But the Keystone Fund has been doing good for the long term. So hopefully, I can keep these ones for long term and kind of rake in those long term capital gains. But if it doesn't, it doesn't. And VU is again a small part of this portfolio, but something to just kind of round it out, give me exposure to other markets. And again, is very cash heavy. I like to be cash heavy for multiple accounts, and this cash is just gaining interest while I use it as collateral for these short put positions for GM and other plays. I'm pretty cash heavy as of now, and yeah, the exposure to this position is pretty good. I like the risk tolerance here. It's not too crazy, but it does have exposure to the big tech names, but these names aren't going anywhere, and I doubt a short-term disruption is going to hit Microsoft or Apple too badly. Keystone Fund is more geared towards safety and is doing pretty good for the most part. This is kind of a portfolio review. The combined accounts have been doing pretty well. Performance has been really, really good for the past year since November, and hopefully it can continue. That's my weekend review, and this is something that has been in the works for a long time, and it's just starting now to kind of flourish. So hopefully I can continue doing this and just kind of get better at just running this portfolio and seeing how things change from here. That's my update for now, and hopefully in the next week I can finish October off stronger, and let's see where this goes. Thanks.